three top assets at the top of the food chain. I want to talk about each of these assets. I want to talk about three ways we can trade each of these assets. And guess what? They're going to be different ways to trade the assets. All right, so I've got Bitcoin at the top of the food chain. I've got gold and I've got stocks. Why? Because when you look at the average of each of these, you're going to see that looking at the last year and even further out, the returns on Bitcoin, the returns on cryptocurrency have trumped the returns on gold. The returns on gold against the average stock has trumped the average stocks. Let's take a look at each, and let's talk about how we could trade these going out in the future. All right, so let's talk about Bitcoin. This was an interesting one I pulled, which I found was very interesting. Out of the world's 90+ trillion money supply, only 8% exists as physical cash and coins. But yeah, tell me again how Bitcoin isn't real. That's a great answer to the few people that are out there that follow me and that say Bitcoin is not a real asset. Anything to me is a real asset if it has a bid and an offer. And Bitcoin has had a bid and an offer for as long as I can remember it. Now, let's get outside of this quote and let's talk about the charts. Bitcoin. So Bitcoin came out of this weekend back above 120, hit 122 Sunday night. All-time highs being tested again. We went above the 120, 142 area and are currently trading right around that area as we speak. It's only a matter of time before 120,000 goes from being hit as resistance to being hit as support, right? Scarce object. People love scarcity. It's in the right time frame. We expect Bitcoin summer to continue and crypto summer to continue. But I want to expand on that just a bit and talk about how to trade it. Look at Ethereum. So Ethereum cracked the top 25 as the most valuable assets. It actually took out Netflix last week and is now in the 23rd area. Look at MasterCard as number 22. That could be taken out pretty quickly. Eli Lilly is going to take a little bit to get there, about another 10% move. But if Ethereum goes back to all-time highs, which are around, I believe, $4,800, give or take, then that puts it somewhere right around the S&P 500 ETF trust, which is one of the most liquid assets in the world. So there you go, crack the top 25. Here's what it looks like on a chart. Ethereum has nearly doubled in the last 60 days. Take a look, and I'm not talking about April 8th, when it was trading down there in the teens, the 1700 area. I'm talking about the end of June, when Ethereum was below 2,200, and now is sitting above 4,200. So the question that I asked myself, that my researchers are asking, that you may be asking, is alt season finally upon us? A lot of the smaller coins are starting to wake up. I'm not a big fan of smaller coins other than trading them with the idea to get rid of them as quick as possible. But I like Ethereum. That is a portion of my long-term holdings. If alt season's up, what's good for altcoins is going to be fantastic for Ethereum. And what could be happening is we could see Ethereum for the short term become the front seat player. So instead, in terms of looking at day-to-day moves, day-to-day, week-to-week gains, we could start seeing Ethereum having bigger day-to-day gains than Bitcoin. I know stock patterns have repeated the same movements at least 90% of the time over the last decade. I'm Tom Gentile, America's pattern trader, and I'll show you exactly what trades I'm watching this month and teach you how to aim for those triple-digit gains, all for just $9. Scan the QR code below to get started. How do I trade these? Well, buying Bitcoin or Ethereum, you can buy them literally with any amount you like. A lot of people sit there, and this is even family members. We talk about this, and they say, Bitcoin's too expensive. I can't buy it. You know, if they simply took Bitcoin and they priced it in terms of sats instead of a full coin, people would change their minds on it immediately, right? If they took the eighth decimal place and they priced it in terms of the 8th decimal place, then all of a sudden it wouldn't look so expensive anymore. But you can buy it fractionally with any amount you like. Ethereum too, right? You could buy the ETFs. For Bitcoin, think IBIT. That's the most liquid. Has the best spreads out of anything out there in terms of crypto ETFs. For Ethereum, ETHE, relatively new. That is the Ethereum ETF, but also very liquid. And if you're an option trader, then you look at call options. Look at call options on IBIT, right? More so than Ethereum. The calls on IBIT, we've tracked the volatility enough where the call volatility on the IBIT ETF is actually quite cheap, right? Again, I'm looking at a minimum of September as the expiration month. So check the volatility yourself. Check and see what makes sense for you, but that's how we're looking at trading the big cryptos. Now let's talk about gold. That was number 2 on the financial food chain. So gold's near its all-time highs at around $345, looking at the next target. We're currently trading around 308. It is having some interesting time getting at and above the 316 area, but it keeps getting close. And with the money supply continuing in the same direction, which is down, it's only a matter of time before gold jumps above its all-time highs. If you take a look at the range that I'm looking at right here, between where our all-time high is and that 38% retracement, and you put those together, 345 is what we're looking at as the next target. Also take a look at the volatility. The volatility in gold, it spiked with that first move up in gold, but as gold continues to hit that all-time high and get close to it, look what the volatility is doing. Volatility has dropped. It's actually back down to close to year-to-date lows, which means calls and puts on this asset or the ETF have gotten very cheap, right? Silver, not much different. Silver, however, as it's not at all-time highs, but it's at multi-year highs. It's been continuing to chug along and move higher, and has come off of $35.72, trading around 34 and change as of the close here. And you're looking also at the volatilities that have come down to near year-to-date lows. Could silver get pulled up with gold? Could gold pull it along? Very, very possible that it could. So trading the metals, you could buy the physical asset, gold coins, silver coins, store them. Now, if you store them yourself, there's no management fees. But if you're going to store them off-site, you could have a vault fee. You could have a storage fee for that. You could buy GLD. You could buy SLV, the ETFs. These require no time decay. You can hang on to them as long as you like. They do have a small management fee. When you look at any ETF, it's an exchange-traded fund. Think of the F, fund. For a fund, there's a fund manager. A fund charges a fee. Some are ultra low. Some are higher. You want to check with the fund's prospectus to see what it trades for. And then finally, if you're an option trader, again, I showed you what the volatility looked like for gold and silver. The call options have cheap IV. Again, another minimum expiration that I'm looking at there is a minimum of September. But looking at these charts, you might want to even go out longer and make it a medium-term trade. Now, finally, number 3 on the food chain was tech and AI. This is an article that just got released. This is the headline of the article. Just got released by the Wall Street Journal. Billions flow into new hedge funds focused on AI-related bets. All right. So what am I talking about here? AI and tech. Take a look at the chip market, because in order for AI to function, you have to have semiconductors. Number 1 on that is the $4 trillion stock company Nvidia. NVDA. You got Broadcom there. Taiwan Semi is on that list, and then there's quite a few others. But there is a big difference between who's number 1 and then the 2 that are gunning for second place, and then there's everybody else. These are the chip stocks by market cap. If you look at the Goldman Sachs AI basket, right? You want to take a page out of the professional firm Goldman Sachs. Nvidia is the top trade from their AI basket. Taiwan Semi comes in number 2. Then you've got software data centers. There's 4 of those: Palantir, Oracle, Microsoft, and Vertiv. Then you've got infrastructure, which is GE Vernova. You've got Constellation, and you've got Vistra Corp. This is their 9-stock basket that you can look at. I'm sharing all that with you, but I want to also talk about what we can do. And you can do this with any of these. I'm going to just mention one. I think you know the one I'm going to talk about, and that is Nvidia. Nvidia's doubled in price since April, being down below 90. It's now trading above 180. And so where do we go from here? The next target that we see could be something in the mid-2s. 250 for a next target. But that's not going to come between now and September. This is a long-term projected target. So what do we do with the tech and AI area? Okay, same thing at the top as any asset. You could buy the shares. They have no time decay. They have no management fee. You could also look at options. And when I look at the options, there's 2 different areas that I could look at here. Number one, I could go long-term. And I can tell you right now, when you look at something like Nvidia, it's not cheap. Because it's not cheap, those call options, even though they might be cheap in volatility, and they are, they're not extremely cheap, but they've been pricier. But they're still expensive because we're talking about a $180 stock. So long term, you know that the options prices are going to be more expensive. Look at call spreads. Look at call spreads, long-term call spreads, with a greater reward to risk, right? Longer term trades. And then finally, here's another way you could play this too, and that is high probability trades. And a high probability trade would be, why not look to acquire the stock by selling puts? You're going to get paid to obligate yourself. You could obligate yourself at the price you like. Maybe it's 150. Maybe you're saying, wow, I wish I would have bought Nvidia back in June when it was trading at 150, because now it's 30 points higher. You could sell the 150 puts with a September, October, etc. expiration on it and get paid to sell. And maybe you won't get the stock. Maybe you will get the stock. But there's a guarantee you're going to get a premium regardless of whether you get the stock. So, 3 different assets, 3 different ways to trade them, and my outlook on each of those going forward.